All right, everybody, I'm going to be just a few moments. As soon as I started hitting the button, my dog woke up. He needs to go to the restroom, so I'll be right back. That's just the way it goes, guys. Hold on a moment. All right, sorry about that, guys. That's just bad timing, I guess. Good morning, everybody. Into the quarter. Lots of reports coming out about how record-setting the bad quarter was. Uh, Seasonality suggests when we have a bad quarter at the first of the year that we often have a really good quarter at the end of the year. So that's something to look forward to. The overnight hours was weak around the world. Um, had a significant move in the oil market last night. Crypto kind of holding the line, bonds and the dollar. But looking at the global markets, it's mostly sentiment driven. People kind of lost that warm, fuzzy feeling. Yeah. So, a full calendar today. We always want to start with a focus on what events we have coming out, how we want to plan our day around the calendar. keeping our eye on the clock. And what I always recommend is try to find somebody who can break down the dollar in a more detailed, nuanced perspective. As I covered yesterday when I was streaming, um, one really quick fix for the dollar is to just compare it with VIX futures. If the dollar and the VIX futures are paired or correlated, then you have a really good idea about what's going on in that dollar. But there are times where a strong dollar is good, and then there are times when a strong dollar is not so good, or on the opposite side of that, a weak dollar. So we don't want to just take it at face value and see a dollar making a move or a dollar being in a certain area and think we understand the why behind it. On FX Street, they usually have this little what you need to know section at the top, and they talk about the dollar there. So it's just a nice little heads up in the morning. This is a free site. You don't need to subscribe or sign up. You can. They do have, you know, even a free sign up process, but from experience, I will tell you that they will just bomb your email like these are crazy spammers. So, either don't sign up or give them a fake email address or something like that, just so they don't completely harass you. The dollar opens at 8, the bonds open at 8:20. We also had um, 7:30, 8:30, 9:45, 10:30, 11, 11:30, and 3 o'clock. It's a full house today, guys. Not only that, it's the end of the month. We're near the end of the quarter. Like there's just all of these things going on today. It's going to be pretty rough, right? So, of course, it's not Friday. It sure feels like it, but it's not yet. So, we're not running a 0 day today, but we are right there at the end of the month. We got all these things going on. Be very careful today. Keep your eye on the clock, and just keep in mind that when these reports come out, they're not always really clear cut reports. The information is not always solid and actionable. They have to stop, call the nerds, let the nerds crunch the numbers, get a response, and then make a decision. Another thing about these reports is they've already programmed algos to respond and react to the headlines, to the news, the things that are in the reports, and the algos will fire off the trades as commanded to. That it doesn't think about it, it doesn't contemplate it, it doesn't have fear about it. It just does what it's told, right? Which is why oftentimes when you see a bit of news come out, you'll get that first initial reaction in the market, and then very often it turns around and does the complete opposite of what that first reaction was. The first reaction was the algos. The second reaction is the institutions and or us making a more informed decision afterwards. We hit the expected move on Tuesday. You can see that since then we've been maintaining inside the box, which is really nice to know that the weekly expected move is still a valuable, useful bit of information, even right now in a market that is more chaotic and crazy and extreme than any market we've ever had in the history of the world of the marketplace. Right? It really is that bad out there. And yet, consistent tools like this help us, stay on track and find ways to be profitable. So we are still inside the box. It's very likely that we will close the week inside of the box. And keep in mind, this is a measured move, right? It's a formula using the square root of time and some other little key bits in there. But this week to week expected move is more than 80% accurate. And we close inside the box that 80% of the time. All right. So there are times where we don't. right? Like 2 weeks ago, we closed outside of the box. It was pretty obvious that we were going to close outside of the box. So thinking about the day that we have today and then tomorrow and being done for the week, this market could easily range all the way back down to 44.50, and it wouldn't be considered a bearish market. It wouldn't be considered negative or anything like that, right? It would be considered normal, a part of its expected move, and it would be in line with this structure back here from the third week of March. So I'm not saying we're going there by any means. I'm not implying that it's going to get that bad and we're headed down to those lows. I'm just saying that we could, and it would not be considered extreme at all, right? It wouldn't be out of line. All right. So range bound market, we are sitting inside of yesterday's price action. We're not exactly in the middle, but we're pretty damn close. You really want to keep your eye on the edges today. Just set an alert. That way you don't have to sit there and babysit this thing all day. We're unlikely to see an inside day breakout, but we absolutely could, right? And there's two things that we can break out from. There's yesterday's high, and then there's the Globex high. So the RTH high and Globex high. And those two across the top should be treated differently. 46.30 and then 46.20. Then we have our own intraday Globex high today to deal with, 46.15. So that's three different levels to the upside that we would need to work through. Add to that another level where we closed yesterday and or opened last night in the Globex. So to see a move to the upside, we would need to break through each one of these levels. We certainly could. Um, Due to all the economic news on the table today, we absolutely could make a move like that. But it's it's a pretty strong assumption to believe that the news would be consistently positive through every one of those events and continuing to galvanize us in that upward move, right? And that's, I mean, it's really unlikely. It's kind of like thinking, yeah, you could win the lottery. You go in and buy a scratch lotto, maybe you win 20 bucks. But how many times in a row do you think you could do that? Well, how many econs do we have today? We would need each one of them to not only be good, but really good and feed into the other econ and then feed into the other one and the other one and the other. See how unlikely that is. So you know, it's possible, but not likely. Take it in the other direction. Suppose we Busby off the bottom of this range and continue to move to the downside. We're already through the Globex low of yesterday. The only thing we have left is the RTH low of yesterday, around 45.75. So if we Busby off the bottom of this price shelf, head down towards the low of yesterday, and we breach that, then we can start thinking about, well, what do we have below that? As we're going to go look at the volume profile to really answer that question better. There's nothing from Tuesday that would help us out. We would be completely underneath Tuesday's levels, other than say the open of Tuesday, right? The Globex open of Tuesday. And that would be such a minor soft pivot point that I really wouldn't look for any support or structure or help or assistance from that thing. And that would lead us to Monday. So if we breach 45.75, we're really looking at 45.55 at that point, maybe 45.50 to validate that rather than just, assuming that there's some structure here. I want to take it over to the volume profile and look at this area instead and ask, do we have anything else in here that could provide a little more validity to the levels that we just marked out? 45.50 is the top of the value area. It's the VAL or VAH value area high. So we do have that. It lines up and it demonstrates confluence. So we're not just randomly throwing a line out there and saying, oh, yeah, that looks like a good pivot point. It matches with the volume profile. Although that is the value area high, the volume is actually below that, closer to 45.30, not 45.50. Right. So kind of keep that in mind. If we do get that week and start heading to the downside, there's nothing to catch us until we get to the mid 4,500 area. Yeah, you like it. So, scenario one, we stay in the range. That is the primary thesis for today, that we're very likely just going to hold the range. Scenario two, that we head to the downside. Scenario three would be that we head back up and breach yesterday's levels. It's all going to be on the news today. So, really keep an eye on that. The econ and the clock. This is the kind of day where you may want to go do something else or get your day done as soon as possible and just shut it down. There's nothing wrong with that. One thing that I really struggle with as a coach is getting people to recognize where they thrive and where they really suffer. You should not assume that every day is a tradable day that matches your skill set or your strategy. And yet, if you were to take a little bit of time and think about where you don't want to trade or what kind of trading day does not suit you well, it would really help you out, right? The process of elimination is a hell of a lot easier to do than the process of acquisition, right? So, something to think about. I've never had to ask somebody if I like something, right? It's kind of a good way to think about it. You don't ask someone, hey, do I like Pepsi or Coke? Do I like Nike or Reebok? Do I like range bound days or trend days? You know what you want. You know what you like. Even a new trader knows what they don't want, right? So again, something to think about. All right, for the Nasdaq, same thing, range bound market. Got some structural levels to the upside that include our own Globex. Um, the open of today's session, which we're just hitting that point again. Why Thinkorswim would default to such a dark color like that? It's just ornery. So you can see we just passed through the Globex open. We've got our own Globex high at 180. Yesterday's high at 230. Should we actually manage to get past that, then we've got yesterday's Globex high 260. So we got our levels. I've still got the bar there, the big red bar that I drew yesterday. It's still in play. It's still the zone sitting at the 250 area. Should this market really enjoy the news from this morning and it confirms and validates what the market already believes, we could see those levels. I find it hard to believe that we're actually going to go for some kind of 2.5, 2.6% move today to the upside. I don't see that. It's possible though, right? We don't want to say that it can't happen. So that would be the upside move. What's the downside move? Well, we'd want to get past the low of yesterday. We're talking about the roundy, 15,000. You could try to dial that in and get it to an exact spot, which would be somewhere around 15,012. If we happen to breach that with conviction, then we'll start dealing with Monday at that point, because there really is no Tuesday that would interfere with this, and it'd be those Monday levels. So big round number 15,000. If we happen to get through that, it's another 100 points down, 14,900. There is a little bit of validity at 14.95, but I wouldn't expect it to slow us down, because if we get that negative, it's going to be moving like a freight train, right? Like a diesel can't stop those things on a dime. There's just too much inertia behind it. That's not the right word, but hopefully you get the gist of that. So, primary thesis today is that we're going to stay in the range. And it's a really big range on the Nasdaq. There is plenty of room for us to hang out at that level and just not see anything drastic or extreme. We come in and look at the weekly expected move. I know it's probably a little hard to see. It's easier if we just draw a box on the lines. So that was the weekly expected move, and we were completely outside of the box. Now we're back inside the box. The statistical value of the weekly expected move is most accurate in the S&P. Any of those S&P products, SPY, SPX, the ES futures, even the micro, right? The S&P is the most expected move accurate product that exists in the market. There's talk about having 5 expirations a week coming soon, and they always experiment in the S&P product marketplace. So it's going to get that 5-day expiration before anything else. It used to be the only product that had 3 expirations in a week, because they were experimenting with that. And they did that for almost a decade before they finally moved beyond those 3 expirations in a week on only SPY. And now you can get it on the Qs and right, they spread it out into the other indexes. So now they're talking about bringing in 5 days of expiration each day. Monday, Tuesday, Wednesday, Thursday, and Friday would have an expiration. That will make this expected move even more accurate than it is now. And the reason that the S&P has been so accurate over the years is because it did have those 3 expirations, but now we're talking 5. So it's going to really dial in this expected move. I've seen a question about where to get this. It's in the Discord that I developed for sharing Thinkorswim indicators. You get to that place by following the link in the bullish bears. So if you were to go to the trader's resource zone, scroll down to custom scripts in this channel, there is a Discord invite to the Thinkorswim workbook. Discord has search features. So once you did go to the Thinkorswim workbook, you could just go to the upper right corner, type in the word weekly EM. You can see just by typing the word week, it already popped up and shows me weekly EM. Just click on any of these, and I've got all of these different ones. They all do the same thing. They just do a little bit extra. So one might have a cloud around it. One might count how many times we stayed inside the box, which is really good for iron condor analysis. So they're all going to draw the same 3 lines. They just may or may not have additional features to it. And that's how you get there. That's how you find it. You copy the link, take it over to your Thinkorswim, and import it into your Thinkorswim. Yeah. Yeah. So even though the Nasdaq is not as accurate in its expected move, meaning it's not 80%, it's still 70%. And 70% is really good. 70% is what we apply to the rest of the marketplace, right? We only give SPY that additional 10% because it's earned it. The good thing is you can go back and count, say, the last 10 weeks. How many times did we close outside of the range in the last 10 weeks? If you find that we closed only once outside of the box in the last 10 weeks, then you can say that it currently is 90% accurate. See how easy that is? Simple, effective. So you can check its accuracy on anything just by counting back and seeing how many times we closed outside of the box. There are periods in time where we do get consistent breaches in a row, like 2, 3, 4 weeks in a row. That really stands out. That shows that the market makers are getting it completely wrong and that the market is getting really, really violent. So, I mean, it's a heads up in so many different ways. I've done a lot of videos on this indicator, and I've got 18 fully formed trading strategies that are applied to this indicator. Some of them fully automatic, hands-free, no analysis required. You just trade those suckers with no thought or background behind it. So a really good way to do business when you don't have the time to go in and run technicals. Something to consider. Due to the late start, we won't get everything covered that we normally would. You do want to keep your eye on gold. It's still being used as a global hedge. That move in the oil was really significant last night, and you can see that we had an amazing response in the marketplace when that happened. But keep in mind, if we scroll earlier into the trading day, when the S&P and the Nasdaq started to breach levels and break to the downside, there was no move in the oil market, right? It didn't do the same thing. So just because you have the S&P moving in a certain direction, or just because you have oil breaking down and you see a response on the opposite side in the equity markets, does not mean that they're a correlated market. This is not a teeter-totter, right? So when one side goes up, the other side does not immediately go down. It's not the way things work. You can get them by going to the bullish bears and going into the next level library, looking at expected move. I don't know that all 18 of them are there, because a lot of that 18 is in my coaching Discord, and that they're not all at the Bullish Bears Discord, or they're not all at the Bullish Bears website. So some of it you just don't have access to. But the ones for the Bullish Bears that are there, next level library under the strategy section. All right, so the move in the dollar is really going to be something you want to keep your eye on. The dollar and the bonds have been bullying the financials around. They are the move that we want to keep track of. So we're looking at a 3-year chart of the dollar. You can see that we have managed to maintain below that $100 level. Really want to keep your eye on this thing. I mean, we keep threatening above that 99, and it's getting a bit rough. To get past the $100 level is going to be a significant change event in the marketplace. Absolutely something you want to keep track of. So we don't really put a lot of educational content into the Discord unless it's public stuff, things that you could get on our own YouTube page. If it is next level material, you'll never find it in the Discord. You're only going to find next level material by going to the Bullish Bears website, logging in, and going to the next level library. It's the way that it is. So, guys, keep your eye on the dollar. We don't want to see any exaggerated moves, and we've already started to see them this morning. It's a little bit of concern for that, right? You start seeing those kind of moves. The dollar and the bonds, you just want to keep hammering down on those two and really keep your eye on them. When they start making and breaking and giving us exaggerated sweeping gestures, it impacts our market greatly. Add to that the fact that financials and energy have been the day trade things to trade. I mean, like, they're like the thing that's worth trading on a day-to-day basis in the last 6 weeks to 2 months. Right? They've been a real good go-to source of day trade. So when you can tie it together, trend line breakovers with a move in the bonds, or a inside day breakout failure with a move in the dollar, you get that correlated market state. You get a much more nuanced trade. So like I said, we did get a late start. I'm not going to be able to hit everything that we need to hit because I've got somewhere to be on the end of the hour. So guys, be careful, be safe. When it comes to the content, not everything that I make and publish goes to the Bullish Bears. Some of it stays in my own private Discord for my own coaching clients. It's just the way it is. Slowly, we've been building out the content on the next level library and the Bullish Bears. But, even after I make something, I still have to rely on Lucian to get it uploaded to the site. We spent last week over 5 hours loading new video content onto the site. So there is material there. I've brought up automatic trading strategies before. There even is one on there already. It's the SPY strategy that I used all through 2020. That one was also automatic and didn't require any form of technical analysis, and it did really good. That's called the mechanical SPY strategy. It's right on the next level library. And it's an example of the same kind of trade logic, right? That we can run automatic systems and not have to sit there and dial in running technical analysis on everything. You do have to keep in mind, though, that we're in a very violent, very extreme market, and that those automatic systems don't necessarily apply in a market like this. The weekly expected move systems do, however, work really good, even in the current market environment. Those are working just fine. One of them, just a simple market behavior, is that we hit the edge of the expected move early in the week, say on a Monday. You take that little bit of logic that I just gave you right there, and you go back and apply it. Just look at the market on a daily chart with that indicator on there and ask how many times would it have worked and how many times would it not have worked? And do I have a trade strategy based on this trade logic? You hit the edges on a Monday, say it hit the bottom, go long. Would it have worked? There was a Monday. It hit the edge on a Monday. If we had gone long right there on a Monday, would we have been profitable by the end of the week? Yep. Well, that's just one example. How many other times would that have worked? Go back and count them. Start to develop your own trade strategy. It's not that hard to come up with a trade plan. Here it is. Hit the edge of the weekly expected move on a Monday. If we had gone long that day, would we have been profitable at the end of the week? Yep. Oh, wait, well, that's only two examples. How many more can we find? Go back and do a little bit of work. Stretch your legs. Have a good one, everybody. I will see you all in the Discord.